Hello, everyone, and welcome back to Sudden Wealth. It's a pleasure to be here in this evening with some good news from overseas. First of all, quick update on my gold prediction. You remember I did say by the end of July we should get to 1850 to 1860, and today we've seen 1890 for the first time. It's very clear. Sorry for the gold bugs who were predicting gold 5,000 tomorrow, like the likes of Peter Schiff. You need the time to buy gold will be when Peter Schiff is very upset over in his podcast or doing an interview, scrambling and talking over himself, trying to find ways to justify the gold price action. That's the time to buy. When he's shouting at people to buy gold, that always marks a top. That's exactly what he did above 2,000. So keep that in mind. Now, what are the good news? There is a country in the Eurozone whose inflation year on year is now below 2%. That country is Spain, which is a major European economy. I think it's the fourth or fifth largest after Germany, the UK, France, and Italy. I think Spain is the next one. And mostly driven by the lower energy prices. So Spain has a huge advantage, which is their natural gas comes from North Africa instead of other regions in the globe. And while their, let's call it core inflation is still high, their total inflation is now, I think, 1.6, 1.5%. So well below the 2%, which is, of course, good for the region. Now, this contrasts with Italy, for example, which had inflation of almost 7%. And this is my point. In the US, we tend to look at Europe as all the countries are, they're all the same, there's no difference. And this is a huge difference. You can see that Spain is actually already in the very good area of inflation, while Italy, despite being both Southern Europe, is completely in the shithole. While for the US stock market, the Nasdaq is slightly red, all the rest is green. I think we're starting to climb the wall of worry once again. My prediction, you may recall, we are going to see all-time highs by Q1, quarter 1, 2024 for the US indices, with perhaps the exception of Russell 2000, but we should see it in the Nasdaq 100, triple Qs of course, S&P 500, and the Dow Jones. In any case, it seems that we are moving in the right trend for inflation for one of the major economies in Europe. We hope the US will follow suit in the middle of July, and will put at ease some interest rate raising fears. Now, as I mentioned before, you may have heard, you may have not, the Fed is trying to normalize interest rates. Now, will they make it? I don't think so. Why? Because of government budget deficits and trade deficits which need to be financed by debt, which means if interest rates go up, interest payments go higher, and the US finds it very difficult to finance all the deficits plus the extra interest payments. So I do think this has a let's say a deadline or a time clock on how much the rates can stay at this level. However, the most bullish case for the market is not a rate cut, it's a rate hold. Why? No more rate hikes, which of course bring uncertainty and the possibilities of recessions and what's going to break. Rate cuts means that something is already doing very badly. Rate holds means that we actually got somewhat of a soft landing. So keep that in mind, guys. Don't wish for rate cuts, at least not in the near term. Maybe in a year from now or so, they can justify it with a nice story. But at the moment, if they do start cutting rates, that shows that their strategy is failing. Now, I hate the Fed as much as you guys, and I do think they're going to fail. I just don't think that they're going to fail as quickly as people believe. So that's another prediction of mine, and let's see if I'm right or wrong. And guys, I'll catch you in the next one.